Hey everybody, it's Mark Jones, your millennial mortgage expert, branch manager of Directions Home Loan here in San Antonio at LaCantera. And today I wanted to go over the savings that you could have by dealing with an expert when it comes to your mortgage decisions. There was a scenario that arose this past month, and I wanted to wait for that actual transaction to close so that I could get the borrower's permission to take you guys through what actually took place with this borrower. As I paint this picture for you, I'm then going to jump in to show you the proof that's in the pudding in regards to how much it actually cost you to deal with someone that is not experienced. So, day one, I get a phone call from one of my real estate partners letting me know that the borrower was working with a lender that was an online lender, and they were purchasing a new property here in San Antonio, living in California, and the idea was they wanted to purchase a second home. So at the beginning of the transaction, which I was not involved in, that borrower actually received an estimate from the lender online, and it looked like they were putting 20% down, going conventionally. So as I move along on this actual journey, I want to actually show you the proof that's in the pudding. So roll along with me on this as we look at the very first estimate that this customer received. And this was from Cornerstone First Mortgage, which is an online lender. And as you can see, day one with this customer, they received a loan estimate on April 21st. And this was for a 30-year fixed conventional loan that was not locked in. They were financing $232,800 at a rate of 7.5%, and looking at this principal and interest only, a payment came out to $1,627.77, and it had that customer bringing to the table $69,596. Now, notice the dates on this. This is here as April 21st. And the next estimate that they received, which was a couple of days before closing, showing them that it was actually locked in, and this was on May 11th, and now the loan is actually locked in with a much lower loan amount, and at the same time, the interest rate that they promised is now up an entire point, which increased the payment, and come to find out, it also increased their down payment. So from 20% down, they're now having to put 25% down, and the cost to close went up drastically. So at this time, I received a phone call from the realtor letting me know what took place and how this lender had, pulled the wool over their eyes. Now, here we are on the 11th hour, 12th hour, 13th hour, just before closing. They're receiving their final disclosure, letting them know that their rate is now at 8.5%. It has gone up a full point, and they have to pay more for that point. And in speaking with the customer the very next day, I came to find out that it was a second home purchase. They only needed to put 10% down. And when we looked at the options, we were quickly able to lock in a rate for them. So as you can see, the very next day from 5/11 to 5/12, you can see that they are now with Directions Home Loan. Their rate is locked in, and essentially they were locked in for a 6.125 interest rate. You can see down here that the closing cost for this totaled up to $11,728. And throughout the process of this, the lady was super grateful and obviously saving them plenty of money in addition to the monthly savings and the monthly payment. So come to the final day. This is 3 days prior to closing. We did have to get the contract extended. Luckily, the listing agent was someone that I have done business before, and she trusted what I was letting her know, that this borrower had experience with the previous lender, had nothing to do with them not qualifying, but more so a much better scenario in regards to the lending side of things. As you can see here, 3 days prior to closing, they're still locked in at the 6.125. This, in essence, allowed their payment to be $1,591 with only the 10% down, and through that process, they were actually able to negotiate $10,000 in closing costs from the seller, which then was applied towards their closing, giving them $2,000 in closing costs total, and their bottom line now at $24,440. A huge dramatic difference between this estimate showing them $87,180 with the $15,000 in closing cost, 8.5% interest rate, all the way to a 6 1/8 interest rate, $24,000 to the bottom line, and getting $10,000 in closing costs from the sellers. So why do I show this to you? The reason why I'm showing you this, guys, is because some things that are too good to be true sometimes are, and some things that are too good to be true sometimes aren't. Experience in your loan officer is one that is not. Definitely recommend you as a consumer who is shopping for mortgages, whether you are currently in Texas or moving to Texas, to look at experience in your mortgage lender. It has very little to do with the actual company that they work for versus the experience of the individual loan officer. You can check reviews online. You can definitely Google any kind of information that you want to find about the lender that you're currently working with, but make sure that you are working with a seasoned veteran, especially in a market like today. So if you are someone looking in the Texas area, please look us up at LaCanteraLoans.com, and we are definitely here available with the experience that you need in order to accomplish those goals. If you or someone you know needs this information, please like and share. Definitely just subscribe to our channel. We're definitely coming out with more content like this on a regular basis. But I wanted to show you guys the proof that was in the pudding in regards to the lender that you choose and how much you could actually save by going with experience. So that being said, guys, I'm Mark Jones, your millennial mortgage expert, and you guys make today count.